Hello and welcome to this ACCA F5 question debrief. I'll be your host for the next 30 minutes or so. I'm Carl Ballard, a tutor at Kaplan, and in this question we'll be looking at the December 2011 paper, question number 2, which is on transfer pricing. Now, transfer pricing is an area that students aren't very keen on. The aim of this presentation is to set you at ease, to show you where the easy marks are and how to prepare a good answer. We're going to look at the exam in a little bit of detail first. Let's just remind ourselves that the exam is made up of 5 20-mark questions, all of which are based around different scenarios. And when it comes to a transfer pricing question, the scenarios are often quite detailed. You'll have a number of divisions, you'll have a number of figures for sales, for costs, for materials, for labour, and so on. Remember, each of these scenarios will lead into multiple requirements. In the question we're going to look at, there are going to be 3 requirements. But what's the most important thing we need you to take away from any question in the F5 exam? You must stick to your timings. Remember, we've got the golden rule of 1.8 minutes per mark, and you should make sure that you stick to this rule across all 3 requirements. In terms of getting the most out of this presentation, we would recommend that you have a copy of the December 2011 paper in front of you. So if you haven't already got one, please go and get one from the ACCA website. This presentation then will form around 3 main objectives. The first one is to remind you of the approach to transfer pricing questions in general. We'll then look at a specific question, this question from the December 11 paper. Finally, the last objective is how to improve your exam technique. Each different question that you look at in F5 requires different techniques and different ways of approaching your workings. We'll highlight some of the key bits of exam technique for transfer pricing. In terms of transfer pricing, the syllabus areas are quite broad in this area, and they don't always give that many hints to what types of questions will be asked. Just to remind ourselves though of the 2 syllabus areas. The first one is to explain and set a transfer price either using variable cost, full cost, or a market cost. The second requirement is to explain how transfer prices can be used and how they can distort performance and decisions. Now, in terms of a question, what we'll typically see is you being asked to prepare some profit statements and to conclude on the scenario, as well as talking about the performance of the different divisions. This is really what the syllabus is asking us to do. But we need to be prepared to do that around a number of different ways of setting that transfer price. In terms of exam preparation, what you must always do when attempting any type of question is to be ready for all of these syllabus areas. Please don't try and just concentrate on the areas of F5 that you prefer. We don't know what's going to come up in the F5 exam, so it's a very good idea to have a clear understanding of all the 5 main syllabus areas. Remember, there are easy marks in transfer pricing. Yes, it's one of the areas that students don't like, but I can guarantee to you that if a question comes up, there are a good easy 8 to 12 marks that you should be able to get in this question, which will see you on the way to hitting that 50% that you need to pass this paper. Remember, profit statements will be key, and in this question we're going to prepare 2 different profit statements. And don't, though, just obsess about the numbers. The interpretation of these numbers and talking about the issues is very important as well. And finally, remember, you must practice questions. Don't just revise the topics, Yes, they're important, but question practice is key to improving your exam technique. Okay, so let's have a look now at question number 2 from the December 2011 paper. But what about general answer strategy first? How should we approach all answers that we're preparing in the exam? Remember, the exam room is a very stressful and time-pressured environment, so it's important to stick to your plan. And our plan for the answer should first be to stick to your timings. Don't let the clock slip past you. Make sure you've got a watch on, make sure you've written down the time to start and finish each question. The first thing you must do though is to read the requirement. As I've said before, the scenario is often laid out in the question first. The requirement will be down the bottom of the page. You should direct your attention straight to that requirement first. Read all of the requirements. In this question, there are 3 of those. Make sure you understand each of those requirements before you go to the scenario and work out what the key bits of information and numbers are that you need from that scenario. Then consider the layout of your answer. Don't just take pen straight to paper. Think about how your answer is going to be laid out. In a question such as this, your profit statement will often head up your page and it should be followed by well-referenced workings. Okay, and we'll show you some of those workings on the face of these profit statements in just a minute. Finally, make sure you work efficiently and neatly. The examiner and the marker needs to be able to read your script to award you the marks. So don't rush and try and score the basic easy marks. Okay, in a bit more detail then, this question was formed of 3 main requirements. The first requirement was under the current transfer pricing system, what profit would be recorded for each of the divisions and BAF company as a whole. This was worth then 6 marks, so we've got around about 11 minutes here. The second part was to calculate the maximum profit earned by BAF company if we were to optimise the transfer price. This is worth 8 marks, so we're going to have a couple more minutes to do this part of the question, but this is very much going to build on our answer in part A. So perhaps, we can give ourselves a little bit more leeway in A, and that will buy us time in B to copy some of the stuff that we've done there in part A. Finally then, we need to discuss the issues that have occurred and what issues both the divisional managers need to take into account to benefit the company as a whole, and also make sure we conclude and come up with a recommendation. That part then is worth 6 marks, so about another 11 minutes there. Again, it's very easy to get bogged down in the numbers in parts A and B in the first 14 marks, but you should leave sufficient time for part C where you need to interpret your answer. So for transfer pricing, always draw a diagram. This won't get you any marks, but is very, very important to help you understand how to approach these questions and to lay out the information in an easy to understand manner. As part of this presentation, we will show you how to draw a basic diagram. In terms of the scenario, there can be quite a lot of information for a transfer pricing question. So over the next couple of slides, we're just going to pull out some of the key parts of information in this question. We've got 2 divisions in this question, divisions A and B. We've got a final finished product, a BAF, but this BAF consists of a main unit and some fittings. The fittings represent the product that is transferred from B to A. So the product transfers from B to A, the money transfers from A to B. Okay, and that money will need to be reflected in our profit statements. All of divisions Division A's sales are made externally. Division B sells both to Division A, but it also sells externally to the market as well. What are some of the key figures then that we're given in this question? Well, there's a whole host of them. We've got everything from selling price and materials to labour, overheads, production and sales and demand. You're going to need to make sure that you understand these figures. You aren't going to need all of them for this question, so make sure you can sift through the ones that will be important, firstly for your diagram and then for your profit statement. The examiner's been quite nice in this question. He's laid out, or she has laid out, the information in a very easy to understand manner, separating out both Division A and B's figures. What other information though have we got from the scenario? This will help us in parts B and C. Well, historically, the transfer price has been set by head office. Now though, new managers are in place. Historically again, Division A has only been able to purchase bath fittings from Division B, but again, this could change. Currently, Division A believes it can now buy bath fittings in the external market price for $65 per set, rather than then the $70 that Division B is charging it. So now then, let's draw a diagram. Let's try and represent some of these key pieces of information. First up, mark on our two divisions, A and B. Then show us where the product is moving. The product moves from B to A. The price charged by B for the internal transfer is $75. Other information here that is key is the capacity of both divisions. The capacity for Division A is 80,000. The capacity for Division B is 200,000. We're also told then that the maximum demand for the internal product is £80,000. This is to ensure then that A is working at full capacity. Finally then, let's mark on the maximum external demand for both divisions. For Division A, it's 80,000. For Division B, it's 180,000. Once we've done our diagram, we can then revisit our requirements. Firstly, let's look at requirement A, where we need to show under the current system what the profit is for each of the divisions and the company as a whole. The first thing we should do is lay out our profit statements. We're going to need a well drawn out table, and then we're going to go through the table and systematically enter each of the figures that we need, keeping a close eye on the time. Try and start with the easier numbers first and then move to the harder ones. Once you've done that, total up the figures for the whole organisation. Remember, you'll be computing the figures separately first for each division, then simply add them through in the final column for BAFCO. The profit statement should look something like this. You're going to need 4 main columns. In the first column, you'll have the costs and the revenue, and then in columns 2, 3 and 4, you're going to have the two divisions, A and B, and the total. Some of the headings you're going to need in the first column include the sales, both made internally and externally. Then we'll move on to the costs. These include the transfer price, the material, the labour, and the fixed costs. Finally, at the bottom, we'll need the profit. The first set of figures then to enter are the sale prices. A, remember, only sells externally. So it sells 80,000 units for $450 each. B, on the other hand, should sell 80,000 units to A to ensure that A is fully utilised. Remember, it has capacity of 200,000, so it will have 120,000 units remaining. Each of these should be sold externally for $80. Following through the calculation then, into costs. The costs for Division A include the material for each of the 80,000 units and labour of $45. For Division B, material only costs $5, but labour costs $15. Once we've got those figures, we can then total them up, and our diagram will start to look like this. In the top, we've got external sales for A of 36 million and for B of 9.6 million. Moving on to the costs, we can see that the material and labour costs we were able to work out from before. The fixed costs of 7.4 million and 4.4 million can be very easily taken from the question. Once we've done that, we can start to add up the total for the company as a whole. Simply go across each row and total the two figures up. Once we've done that, add down the columns to come up with the profit. We can see here then that the total profit for the company is 10.16 million. And always note that in a transfer pricing question, the internal sale in Division B should match the transfer price cost in Division A. This represents the money that leaves A that is given to B. And that brings us to the end of the first part. In the next part of the question, we'll look at requirement B. Here then, we need to work out the maximum profit that can be calculated for the company as a whole. To do this, we'll need to make sure that the transfer price is optimised. The first thing we're going to do here then is update our diagram for the new information that we're told. Then we'll repeat the profit statements, making sure that we change them for these new updated figures. So here we can see our original diagram. What I would recommend in the exam, once you've finished with the diagram, is just to cross out the figures from A and writing the new figures that you'll need in Part B. These include in this question the fact that Division A can now purchase bath fittings externally for $65. This means that Division B would need to lower its transfer price. If not, Division A will simply ignore Division B and Division B will end up with underutilised capacity. So B lowers its price to $65. This means then that the maximum demand from Division B to Division A will now be only 20,000 units. How have we got to this figure? Well, the maximum capacity of Division B is 200,000. The maximum demand for Division B is 180,000. The difference between the two is the 20,000. And B, in this case, is going to prefer to sell externally as it will make a higher contribution than selling to Division A. But overall, A won't lose out because it can now source units externally. It's going to source 60,000 of these units as 20,000 of these units are sourced from B. So here is our original profit statement from A, but we're going to update some of these figures. In the exam, you'll be required to draw out a fresh profit statement, but just to make things a little bit easier to understand in this presentation, I decided to use the original figures from Part A. The figures that will change then include the internal and external sales in Part B. We'll also need to update the transfer price, the material cost, and the overall profit figures. First, let's look then at the internal sales revenue. This will only be now for 20,000 units, and we've had to lower our price to $65 to match the external units that A can source. We'll also be making a higher amount of external sales. There'll be 180,000 now of external sales at $80 each. In terms of transfer price, remember that must match what we had above, so we have 20,000 times 65. The new material cost though represents the products bought externally for $65, and we're going to buy 60,000 of these. Also, each product that we buy either externally or from Division B requires $200 of material. So for all 80,000 units, there will be a material cost of $200. Now we've got these figures, we can start to enter the totals into our table. Once we've got these, we can total it up for the entire organisation and then work out the profit for each of the divisions. Note here then that the profit overall for the company has gone up by just less than £1 million. So this optimisation of the transfer price overall has benefited the company. And this is something that we need to talk about in Part C. So just to remind yourselves, in a transfer pricing question, when you've got a profit statement, please enter the easy figures first if you are stuck. Start with the fixed costs. Okay, these will always be the same. Enter in Division A's external sales. This again is quite an easy figure. It doesn't deal with any of the concepts of transfer pricing. Then enter the labour. In this case, the labour was the same, whether we sold internally or externally. And those have not changed between Parts A and Part B. Work through the other figures then as best you can. Part B in this question was a challenging part, so if you only pull 3 or 4 marks together, you should be more than happy with your performance here. If you have time, total everything up, but again, don't be worried about dropping the question and moving on to Part C if you haven't quite finished all the numbers. There are 6 marks available in Part C, and 3 or 4 of those are definitely within your grasp. So for Part C, we needed to discuss the issues that divisional managers take into account when coming up with transfer prices. Also, how their interests will affect the company as a whole. Please make sure as well that you provide a conclusion and a reasoned recommendation. In terms of the 6 marks that are available, there will be 1 or 2 marks available for this, and you will only get 4 marks if you neglect a conclusion. Lots of points then that we can make here. Make sure those points are short and punchy. Make sure that you use a wide variety of different points. Don't simply repeat the same point over and over again. There's no specific lists over what points will get marks and won't get marks, so try and think on your feet. And please use some of the figures that we had there from Part A and B, especially the profit figures. And remember that recommendation. So what are some of the issues here that we might talk about? Well, the managers are likely to be assessed against their divisional profit. This sets the scene. If a manager achieves a higher profit under one transfer price than another, he's going to prefer the transfer price that leads to him having a higher profit, because his bonus is likely to be linked to this. So we end up with quite silo thinking. We're not thinking about the company as a whole, we're simply thinking about bettering ourselves and our division. All they will be then is driven by increasing their profit. They won't consider other divisions. The decisions that they make will also not be in the best interest as the company as a whole. They won't often have a view of that bigger picture. Scenario B, we must note, gives the highest overall profit. The optimum transfer price will usually give this. So ideally, we should have a scenario in which B occurs. Policies will help ensure that this scenario occurs. It's also important to make sure that capacity in both of the divisions is always maximised. Managers, though, will not want to be told what to do. They would like to have their own independence, and they can become demotivated if transfer prices are imposed very centrally. Ideally, they will want to source materials from their cheapest possible sources, but this could lead to underutilised divisions. If, for example, Division A was able to source bath fittings for $50, it would decide not to use Division B at all. This would leave B running under capacity. What's our recommendation then? Well, ensure that A buys 20,000 units of bath fittings from Division B to ensure that it's fully utilised. Ensure that B sells to Division A at $65, so A doesn't end up going elsewhere. Allow A and B some degree of negotiation. Managers will not want to have transfer prices enforced, and this can be demotivating. So what do we need to remember from this question? Conclusion, then. Students don't like transfer pricing. A lot of students don't want to attempt a transfer pricing question. They'll often leave it to the last question in the exam and will not give sufficient time over to it. But what we've seen here today is that there are easy marks available. A well drawn out profit statement with a few figures in can push you from a fail to a pass. Always remember to draw a diagram. This will allow you to interpret what's happening in the question smoothly, quickly and easily. It won't get you any marks, but you will find the question a lot harder without one. Make sure that you're confident drawing up profit statements. In most transfer pricing questions, these are required. And finally, be prepared to discuss some of the issues for each division and for the company as a whole. Talk about managers' decision making, talk about goal congruence, talk about motivation. Finally, I'd just like to wish you the best of luck in your further studies when you come to sit the F5 exam and the rest of the modules that you sit under ACCA. Thank you very much for taking the time to listen to the presentation today, and enjoy the rest of your day.